Hello students, Assalamu alaikum. Today is 25th December, the birthday of our father of nation, Azam Muhammad Ali Jinnah. And today is Christmas also. So all my Christian students, Merry Christmas to you. You are celebrating your Christmas Eve today. And this is our paper. Today we are going to solve June 2024 O levels, paper 12. Yes, definitely MCQs. So let's see. Allow me to. Okay. Now, question. First MCQ. How does a trader use the information provided by financial statements to calculate the amount of cash drawings? Income statement, a financial statement means income statement, balance sheet, might be cash flow statement also included in financial statements. So what do you think? The owner is making financial statement to calculate cash drawings only? No. To calculate the amount owed by trade receivable, is that for income statement and balance sheet have been prepared? No. To check the balance on bank statement, no, we need a bank reconciliation statement. So it means D option should be the answer to compare the business performance over a number of years. How our business is going. Now, number two, the balances remaining on the books of a business after the preparation of income statement included the following. Okay, what was the total liabilities? So we have to calculate the liabilities. Okay, loan from XYY Finance. Okay, wages due. Yes. Rent prepaid. No. Trade receivables. No. Trade payables. Motor vehicles. No. Provision. Not. Okay, there are only three liabilities we have. So if we add them, we'll get 10, 14,000, 15,000, 170. Sorry, 15,270. So C option should be the answer. We have to add only liabilities. Okay. And the question is talking about all liabilities, not long term or short term. Okay. Jamil's financial years end on December 31st, 1st January 2020. He brought down a debit balance of his stationery account. A stationery account shows how much stationery as an asset you have. Okay. So the correct answer is, what does this balance represent? Stationery of inventory of stationery on 1st January 2021. Okay. This is not something showing amount owing for stationery. Okay. It is not showing amount for paid for stationery. It is not showing cost of stationery used. It shows inventory on 1st January. Okay. The inventory account, a stationery account. Okay. Number 4, Alex issued credit notes in August and entered them in the correct book of prime entry. How was the total of this prime entry recorded in the nominal ledger at the end of the August? Credit note means Alex is recording sales returns. So sales returns should always be debited. So D option should be the answer. Okay. Which business documents are used as source of information to make entries in the cash book? Okay. This need, attention. Bank statement, check counterfoil, invoice, pay-in slip. This invoice is actually used for day books, not for cash books. Okay. Again, in B statement, we have invoice, so it means B could not be the answer. Okay, C, bank statement, check counterfoil, pay-in slip, receipt. Okay, check counterfoil, pay-in slip, petty cash voucher, cash. Now here we have petty cash voucher, which we do not include in cash book. Petty cash vouchers. So D could not be the answer. Only C is the answer. These are the documents we use for making entries in cash book. What is the double entry for recording a check payment to a credit supplier? When I started teaching accounts, O-level accounts in 2004 or 5, I think, that time I saw this MCQ somewhere in past papers. So what we have to do, if we are paying to a credit supplier, we'll debit purchase ledger control account and we'll credit bank. Simple. For solving these types of transactions, you should know the debit and credit effect and just right click the answer. Okay. You don't need to read options in that. First, you have to do first you make entry in your mind and then click the correct answer. A bookkeeper made 2 errors which cancel each other out. Cancelling error means compensating error. Okay. When revenue and expenses, a wrong entry in revenue and a wrong entry in expense cancel out each other. So it means it's a compensating error. The total of a trial balance did not agree and $200 was debited to a suspense account. The bookkeeper then checked the books and found the following 2 errors. It means the credit side is heavier. When the suspense was debited means credit side was heavier than the debit side. So that particular person who was making these accounts and that bookkeeper had debited 200 in the suspense account. It means now both the errors, sales invoice was overcasted and incorrectly added. It means both the errors are definitely belongs to the sales account. And it means the sales journal was overcast by 200. Okay. So B option should be the answer. 9. A trader took goods from the business for his own use. He created the purchase account with the cost price of goods $200 and created the sales account with the selling price 300. Which entries did he make to correct the error? Acha. Now, the thing is, drawings should be debited, but he forgot to debit the drawings. Okay, whenever drawings is always debit. So he forgot to debit the drawings. So it means these 2 options, C and D, are useless. Okay. The answer is either option A or B, depends upon situation. Now, if he has created the sales account, okay, what he has to do? He has to debit the sales account. So it means B option should be the answer, where drawing is debit. We need drawings to be debited. Sales is also debit, and the suspense is going to be credit 500. We have nothing to do with the purchases account because purchases account is correctly created with $200. Okay. We don't need to touch purchases account in this rectification. 8, 9, 10. What would result in the cash book balance being lower than the bank statement? Okay. A check received from a customer not recorded in the bank statement? No, because bank statement is cash book balance is lower than the bank statement. So if a check we have received, it is already entered into cash book, not in the bank statement. It means this transaction A would increase cash book, not bank statement. Okay. A customer's check is dishonored by the bank appeared on the bank statement. No, again, this will decrease the bank statement. The bank statement should be higher. So this B option could not be the answer. Payment by a customer directly into bank was not recorded in the cash book. Direct debit, that this could be the answer. But we have to check the 4th option also. Payment of insurance by standing order. Again, payment means bank statement is declining. We have nothing to, we should not answer any statement. We should not answer any statement in which bank balance is decreasing. Only That option is the answer where bank balance is increasing. So C option is the answer. Okay. The bank statement showed a business. The bank statement of a business showed a credit balance of 280. Done. And unpresented check 312. Standing order of $20 had been incorrectly entered as 22 on the bank statement. This is a mistake of $2. So what we have to do? Balance as per bank statement 280 minus unpresented checks. Okay. Minus, sorry, plus, because that $2 is going to be added by the bank sooner or later. So minus 30. Answer is minus 30. It means cash book was showing a credit balance of $30. So this should be the answer. 11 should be the answer. Okay. A business keeps a complete set of book of account. What is not used as a source of information for making entries in the control account? Cash book, journal, purchase journal, sales journal. Okay. Sales ledger, sorry. If we are making entries in control accounts, we do not take any information from sales ledger. Okay. Cash book will tell you about the payments received from or payment made to the supplier or payment received from the customer. Journal show you the contra entries, bad debts. Purchase journal definitely show you the amount of purchases. Sales ledger is separately maintained just to reconcile at the end of the month or at the end of the period. 13. Which item would not appear in the purchase ledger control account? Okay. Return invoice. Yes, sales returns. It has nothing to do with the purchase ledger control account. Contra entry, obviously recorded in both the control accounts. Discount received is going to be recorded in purchase ledger account. Interest charge could be recorded, but return invoice belongs to something sales. It has nothing to do with purchase ledger control account. Okay. The cost of repair of machinery was debited to machinery account. What was the effect of this error on non-current asset? Non-current asset are overstated. Yes. And because the depreciation, one of the expense is not there in the income statement, the profit is also overstated. So A option should be the answer. Okay. Elsevier purchased a motor vehicle costing $8,000 on 1st January 2018. It is depreciated at 40% on the reducing balance method basis. Okay. Which journal entry recorded depreciation for the year ended 31st December 2019. So it means we have to record the second year's depreciation, not the first year's depreciation. So what we have to do first, we have to calculate the second year's depreciation. How to calculate? 8,000 multiplied by 60%. So 4,800 was the book value after 2018. So in 2019, the book value was 4,800. So if we calculate 40% of the book value, it means 1,920 could be the answer. And one thing, provision for depreciation should always be debited till the asset is with us. So it means A option should be the answer. We never debit provision for depreciation unless we sell the asset or we dispose the asset or we discard the asset. Okay. Now come to answer 16. A trader sold one of his vehicle. What is journal entry to remove the total depreciation on the vehicle sold? Okay. When we are selling, it means we have to debit provision for depreciation, and the account which is going to be created is disposal account. So the option should be the answer. Okay. Why is it important to match cost and revenues? Okay. So that every debit has a corresponding credit entry? No, this is for the trial balance. So the business does not incur in any losses? This can't happen. To enable a better comparison of profit from year to year? Yes, this should be the answer. Profit and revenues have nothing to do with the bank balance. When we are comparing revenues and expenses, it has nothing to do with the bank balances. 80. Bad debts. Devendra has written off the account of Tobias. Okay. This is writing off account. So it has nothing to do with Devendra has provided a doubtful debt. No. Not received anything from Tobias. Okay. And Tobias cannot pay the amount due to Devendra. Yes, this is the answer. Paid. Tobias paid an amount. There is no, this is not an entry of receiving any cash from the customer. Okay. Alex purchased goods costing $1,000. She planned to resell the goods at a markup of 25%. These goods were unsold at the year end and were found to be damaged. Alex estimated that could be sold for 600. What value should be shown for these goods in the year end financial statement? Okay. Now, cost is 1,000, NRV is 600. So lower of cost on NRV. So it means it should be kept at NRV. $600 should be the answer. Okay. Unlimited liability is one of the disadvantages of operating as a sole trader. What is the correct explanation of unlimited liability? A sole trader cannot take a bank loan? No. A sole trader has to manage the business alone? No. A sole trader cannot use his private fund to repay his loan? No. It means D option is the answer. Let's check what is the D option. D option says a sole trader may lose both his business and personal funds. Yes. He has to sell his personal belongings to cover the loss. Which item is a current asset? Bank overdraft, loan, prepaid income, work in progress. Bank overdraft is a liability, loan repayable is a liability, prepaid revenues, prepaid income are also liabilities. It means work in progress is your current asset. Yes. Where interest is drawing is on when interest on drawings entered in the accounting records of a partnership business. कहाँ enter होते हैं? Okay. Where they enter? In the appropriation account and in the current account. Okay. It has nothing to do with the capital accounts, interest on drawings. So they increase appropriation account. They increase the profit. So it means they are going to be created in the appropriation account, no entry in the current account. And they are debited at the end of the year in the partner's current account. So B option should be the answer. Okay, T Limited was formed on 1st April 2019. A total of 22,000 to 220,000 shares of $2 each were issued, and shareholders were asked to pay 75% of the share value immediately and 25% on 1st April 2022. So paid up capital should be 75% of the total amount received from the shareholders. Okay. So 190,000 shares were paid, multiply by 2, 380,000, but we have to keep only 75% of the capital as paid up capital. Whatever we receive, we'll keep 75% as paid up capital. So 75% would be $285,000. This should be the answer. Again, I'm repeating myself. Whatever we receive, we are going to keep 75% only as paid up capital, whatever we receive. So we are receiving 190 multiplied by $2, that is 380,000, but we'll keep only 75% of the receiving amount as paid up capital. Okay. Now, which item would appear in the statement of change in equity of X Limited for the year ended 30th June 2020. Okay. Interim dividend paid, yes, on 31st March 2020. Okay. So, yes, this is the statement. Proposed dividend for the year ended 30th June 2020. Proposed dividends should not be added for the coming year, for the upcoming year, for the end of the year. We don't include proposed dividend. Proposed final dividend for the year ended 30th June 2019 and paid on 31st October. Yes, this is going to be included. If proposed is paid, we include. If it is not paid, only proposed, we don't include. General reserve transfer, yes. So it means A option should be the answer. 1, 3, and 4 statements are correct. Uh-oh, 25 was there. A company's financial year ends on 31st March. On the 2021 trade receivable or $45,000. On 31st March 2022, trade receivable were $41,000. It means we have to decrease the provision. When trade receivable is decreasing, the ending trade receivable is lower than the beginning receivable. It means we have to decrease provision. Okay. And irrecoverable debt is 1,000. So, if we are maintaining provision for doubtful debt at 5%, what we have to do? What is the effect of the irrecoverable debt and the adjustment to the provision for doubtful debt on the profit for the year? Now, if we have to decrease the profit by 1,000 for bad debts, but we have to increase the profit for decreasing the provision for bad doubtful debts. Okay, because provision of doubtful debts is going to be decreased. So what we have to do? 45,000 multiplied by 5%. The previous provision on 31st March was 2250, 2,250. And for this year, when it is 4,000, 5% means 2,050. It means we have to decrease provision by 250. So profit is going to be decreased by 1,000 for irrecoverable or bad debts, and profit is going to be increased by 250 for the decrease in provision for doubtful debts. So it means total profit is going to be decreased by 750. So A option should be the answer. Okay. Okay. A club receives subscription total 12,600 in the year 30th April 2019. The following information were available. At the start of the year, prepaid subscription and accrued subscription are given. At the end of the year, only accrued subscription are given. So what we have to do, we have to calculate the amount of subscription that is going to be appeared in the income and expenditure account. Okay, as a source of income. So what we have to do, it's very simple. 12,600 received subscription plus prepaid subscription at the start of the year, 1,300, plus accrued subscription at the end of the year, 1,100, minus accrued subscription at the start of the year. So 14,200, D option should be the answer. Okay. This is how we have to solve this question. Okay. Which statement about the accumulated fund of a society are correct? Okay. A surplus will increase the accumulated fund and a deficit will reduce it. Yes. It includes all monies received and paid during the year. No. Members cannot make drawings from the accumulated fund. Yes, true. The accumulated fund is shown as an asset in this. No, it is shown as a capital, as if we compare to commercial organization. So 1 and 3, B option should be the answer. Okay. Manufacturing company provides following information. Provided. Okay. What was the prime cost? Prime cost means cost of raw materials and direct wages. So 186,000 plus 75,000. 261,000 is the prime cost. This is the answer. Okay. Prime cost means direct material, direct labor, and direct expenses. Okay. Sam works in work in progress 6,500 at the start of the year and 11,200 at the end of the year. Work in progress opening inventory is 6,500, closing inventory is 11,200. When Sam prepared his manufacturing report, he forgot to make the adjustment of work in progress. How does this omission affect the cost of production? The difference in inventory is going to be subtracted from cost of production. So cost of production is going to be reduced. Okay. So what happens? Now, cost of production supposed to be reduced because of the closing inventory of work in progress, but it is not recorded. So cost of production is overstated. And when cost is increased, profit is decreased. So B option should be the answer. 32. Okay, we have to calculate the inventory turnover for the year ended 31st December 2020. Okay. Now, what we have to do, see, cost of sales on 31st December 2020 is 120,000 and average inventory would be 4,000 plus 8,000. 12,000 divided by 2, 6,000. So if 120,000 cost of sales is divided by average inventory, you will get 20 times answer. Okay. Now, I think I should solve this question for you. Here, the formula for inventory turnover is equal to cost of sales divided by average inventory. Average inventory. Okay. So what we have to do, cost of sales for 31st December 2020 is 120,000. It's given. But average inventory we have to calculate. So we have to take opening inventory of 2020. The ending inventory of 2019 would be the opening inventory of 2020. And this is the ending inventory of 2020, which is given. So 4,000 plus 8,000 means 12,000 divided by 2, 6,000. So what we have to do here, inventory turnover would be 120,000, the cost of sales, divided by average inventory, that is 6,000. And we get answer 20 times. Okay. You can calculate it in days also if it is required. How? Divide 365 by 20 and you'll get 18.25, almost 18 days. If suppose they have asked inventory turnover in days. Okay. Melinda, gross margin fell from 25% in year 1 to 15% in year 2. Gross margin means gross profit has declined. Okay. So what we have to do, Linda has paid less for purchases in year 2. No. If she has paid less for purchases, means cost is decreased. When cost is decreased, gross margin is increased. So this could not be the answer. Melinda purchased fewer goods. Even if she has bought fewer goods, this is something about the cost price. Okay. Lowering the cost price means increasing the profit. This is the answer, correct? Has reduced our selling price. This could be the answer. No, no, it has nothing to do with fewer goods because sometimes we get more profit by selling fewer goods, depending upon the nature of goods. Okay. Ralph wants to compare the accounting ratio for his business with the accounting ratio of his brother's business. What would prevent Ralph from making a meaningful comparison? Okay. The business buy from different suppliers? No, no, it's not going to affect. The business have different selling prices? No. The business present their ledger accounts differently? No. The business uses different accounting policies. This is the problem. Different accounting policies. If two businesses are following the two different accounting policies, they cannot be compared. Okay. Last question. Which statement correctly describes the principle of realization? Okay. Now, profit is earned when check is received from a customer. Now we are following accrual based accounting. So when we sold goods, we realize the profit. Even we have not yet received the cash. Okay. So this could not be the answer. Profit is earned when check is received from customer paid into the business bank account. Again, the same thing. Profit is earned when the goods are supplied and ownership passes the customer. Yes. When ownership is passes. This is the answer. Okay. Profit is earned when customer places an order? No. Only when goods transferred, when the ownership of the goods transferred from the seller to the buyer, we realize the profit, whether we have received the profit or we have received the price or not. Okay. So that's all for today. Inshallah, I'll be coming up with another video of O levels June 2024, paper 22, inshallah, very soon. And I'm also uploading some videos of my learnings in CA also, CA program. So you can watch them. There are a lot of things to learn. And what my experience about life is life means learn. Everything, every day, everywhere, you should learn something. Life means to learn. Okay. So take care. Allah Hafiz.